don't understand your anti-establishment appeal. What do you stand for?
I think it's sort of defined in the mission of social capital, which is that I believe in an even starting line. I think that's probably the simplest encapsulation of my belief in how the world should work, which is that, we should all effectively get access to the same resources, and that as many of us as possible should be allowed to get to the starting line, and then the gun should fire, and then the outcomes will be what the outcomes will be. And I think a lot of us feel that that isn't necessarily always the case, that there's kind of entrenched hierarchies that prevent progress. So I push against those because they touch a very deep emotional part of my value system. And I just don't think that the world is a better place for them. And I think we're better off without them.
Chamath, you have acquired a powerful and influential voice, increasingly so on Wall Street. Why were you so excited by the GameStop short squeeze and then so outraged when Robinhood had to throttle buy orders?
Look, on the way in, I think what GameStop showed was the narrative fallacy on Wall Street. I think for years, there was these folks that sort of, were these wizards behind the veil. And they had a way of conducting themselves that purported to be just intellectually superior to everybody else. But in reality, what that short showed was that they were prone to the same, poor decision-making and broken systems and technologies that everybody else has to deal with. And so I found that kind of funny. I think it also spoke to the fact that, we really haven't looked closely enough at the systems that were broken as a result of 1998 and LTCM, long-term capital management, then 2006, 7, and 8 with Bear and Lehman. And we're allowing the same problem, slightly different, but roughly the same problem to repeat itself over and over again. And so that's what sort of angered me about GameStop. And then on the back end of it, I just felt like these two worlds collided in a way where I doubt that in the end, in the final analysis, there was any collusion of any kind. But just the stench of this whole thing just goes to show you, back to where we were talking about before, about how difficult it is for normal, everyday folks to have access to any kind of return. So if you sort of we break down the capitalist philosophy, they are just fundamentally stuck in this cul-de-sac of always being labor and always being sort of at the, ownership of capital, of the ownership class. And the fact that normal folks can't get access to returns and, close the inequality gap is just going to make all of the things we're dealing with today a lot worse than they already are.
From what I can tell, you appear to have reconsidered a couple of the things that you said in the heat of the GameStop moment. Where do you stand on hedge funds as a group of actors and the role they play in modern finance? And also the other thing that came up in the context of this situation, short selling.
I think hedge funds are a really important part of the financial infrastructure, and I think that they should exist, and I hope that, the ones that are good can thrive. But I also believe that disclosure needs to get improved. I think in every other part of society, as the internet has become more sophisticated, as software has become more sophisticated, things have erred towards real-time disclosure of everything in every market. It's just not true in finance, where people are able to sort of use the rules and bend them to obfuscate the truth. So, for example, there was a rule that the SEC was considering where you wouldn't have to publish your longs anymore on the same frequency. To me, that's nuts. I think that actually, we live in a world where your longs and your shorts should be published in real time. Because again, what separates you should be your analysis and your interpretation of the facts, not obfuscation. Another thing is that I think that you should be, forced to disclose the margin that you're running and how much leverage you have. And, I think that hedge funds and banks are no different. They're a critical part of the financial infrastructure. They should be treated in the same way. And instead, I think after 2007 and 8, a lot of the risk effectively, quote unquote, went off balance sheet and away from the banks and towards these other really important actors, but who just don't have that much oversight. I still think hedge funds will do really well. I still think that there are some folks who are incredibly talented who will make just a ton of money for themselves and for their investors. But I think disclosure needs to go up. In terms of short selling, I buy the fact that it's an important part of the market. I'm not a huge fan of it. I do think that certain folks really use it to run a neutral strategy. And, I think that that's great. But I also think that, now in the world of social media, and we've seen this recently, disinformation can be used to not just cause political damage, but I think disinformation can also cause economic damage. And so I think that the SEC is going to have to deal with that issue and figure that out. How do we manage information or interpretation or sensationalizing of things that all of a sudden can whipsaw the markets up and down? And these actors, how are they regulated? Are they allowed to just say whatever they want and the implications are what they are? Or is there a higher standard now that there's so much distribution for so many more people?
That is a calm, sober, and thoughtful analysis. It wasn't a few weeks ago. What changed?
Well, look, as with everything, I really do take pride in the fact that I have strong opinions, but they're weakly held. I think it's important to have a point of view. And, I come to very quick conclusions. But also sometimes I'm emotional and those conclusions are more judgments. And then I take a step back, and I'm fortunate enough to have a lot of people around me that question what I said and push back, and then I re-underwrite. And it's not dissimilar to an investment. I try to come to a very quick point of view, but then I get data and I constantly re-underwrite. And, then the heat of the moment passes, deal heat or, emotional judgment. And then what's left is a sober assessment of the truth and facts. And, that's sort of where I am now on this. And frankly, most of the things that I do.
One of the things the GameStop episode, let's call it, shone a light on is Robinhood. And not just Robinhood as a company, but zero commission trades and the ability for retail, let's call them retail investors, to participate in a momentum chase. Do you think on balance that apps like Robinhood and the way that they've gamified, and you've heard that term many times, trading, not investing, but trading, is a healthy thing on balance?
I think that it should be allowed to exist. You use the word healthy. I think it's healthy? Not particularly, because I think it keeps people in this ghetto of being labor. I started as a day trader, effectively, meaning on the side, I would speculate in my teens and in my 20s. An investor is not a speculator, and it's not a day trader. And I think that a lot of retail, a lot of normal people, the only way they will close the inequality gap is because they take it upon themselves to learn how to become an investor. The government's not going to save them. No law is going to save them. No, taxation of the rich is going to save them. They can save themselves. And you have to learn how to invest, which is to put money into the things you care about and then do nothing. And learning that second part is super hard. And so if you have apps that glorify speculation, you're not going to teach the right kind of behavior. So of course they should exist. I believe in a free market. Am I a fan of them? Not particularly.
I want to understand, Chamath, how you decide what to invest in. Do you believe, and this is a subject that's come up on your podcast, your All In podcast, do you believe in fundamentals, or as has been argued, a stock can trade wherever, regardless of whether it is or isn't hinged, to the fundamentals of the underlying business?
Well, maybe I can just give you an insight into how I process any opportunity.
Sure.
Random company comes in to the top of the funnel. Immediately, I'm making a very quick, hopefully it's a decision, but maybe sometimes it's a judgment. And I'm asking myself, does this fit into my worldview or not? Meaning, is it in my circle of competence? And I have a very simple way of looking at this. Is it going to fix something in equality that I think is important, or is it going to fix something in climate change that I think is important? Those are the only two things I care about. Inequality and climate change. Under inequality, there's a bunch of stuff. Financial equality is important. Healthcare equality is important. Education equality is important. So it allows me to organize a lot of different opportunities. And I'm trying to figure out, is there a consumer proposition here that's important for them? Does it make something more symmetric? Does it take something that was asymmetric and fix it? So that's my first judgment, which is qualitative. That's why whenever I start my one-pagers, it's always, what is the strategy? And you can read all of these one-pagers now. And what you'll get away from them is the first lens is equality and or climate change. Then I start to do the fundamental work. And this is where I have a real issue with a lot of people who say that they're value investors. I think that I'm a value investor. The thing is that when you look up the word value in the dictionary, it doesn't mean cheap. It doesn't mean a cigar butt with 2 puffs left, that famous Buffett Munger quote. I think it actually means something that has value. And so then I'm really thinking about, what are the cash flows of this business? How does it create a moat, right? Meaning in software, some technological way that's hard for people to compete with it. And then can I get it for a price where there's a margin of safety, where if they misexecute for a quarter or if they have a little hiccup, it's going to be okay. Because we've got an entry point where 5 or 10 years from now, this thing will be 5 to 10 times bigger. And that's how we think about all these things. And if you look at the deals that I've done, they kind of map pretty singularly one-to-one to that framework.
So let's use a real world example. Obviously, this is not the kind of deal you're doing, but if you looked at Tesla today through that lens, is that stock a buy with a market cap north